Annuities have hidden fees. Annuities are too expensive. You'll lose money in fees. Let me clear this up right now. Some annuities do have fees, some don't. And most people don't actually understand what they're paying for. So in this video, I'm breaking down what fees actually exist inside annuities, which annuities have zero fees, when a fee might actually make sense, and how to avoid signing something you don't fully understand. If you're reviewing annuities for retirement, this is a must-watch. Hi, I'm Samaya, founder of The Legacy Circle. I help pre-retirees and high earners protect what they've built, whether that's structuring for retirement income, reducing unnecessary market risk, or building smart insurance and legacy strategies. So grab a paper and a pen because I'm gonna give you some serious tips that most advisors never explain. First big clarifier, not all annuities have fees. The first thing people need to understand is that not all annuities charge annual fees. There are multiple different types of annuities that serve multiple different purposes. They have your accumulation annuities that are more designed for growth and typically don't have any fees. And they have your guaranteed income annuities that usually do charge a fee, but they pay you a guaranteed income for the rest of your life. And then they have somewhat of a hybrid model where you can get growth and income and typically not be charged a fee for it. Accumulation annuities. Now let's start with the accumulation annuities. Now, just like how these sound, they are designed to accumulate your money, grow your money. Typically, these annuity contracts have higher interest rates that are offered, and they don't charge annual rider fees. However, they can have fees attached. It all depends on your particular contract. I have come across multiple people who have asked me to review their existing annuity contracts because they thought they were in an accumulation annuity for growth, but they noticed they were being charged fees that were eating into their growth. Now, these fees can vary drastically, just for extra bells and whistles in the product. So it's very important if you're shopping for an annuity, you always ask the advisor, are there any fees? And if so, what exactly are the fees for? Just to name a few examples of these bells and whistles that insurance companies will charge a fee for, strategy charge fees. The company will give you the option of going into a higher interest rate strategy for how your money is credited, but they charge a fee for that higher growth potential. More liquidity. Most companies have a base liquidity of 5 or 10% each year. But if you want more liquidity, you can opt in for that for an annual fee. Enhanced death benefit. Some companies will have a feature to increase the death benefit payout to your beneficiaries when you pass, and this may have a fee for that benefit. Some annuities, like variable annuities, will have a management or an admin fee because variable annuities specifically are still considered managed money. Because it's an investment, your money's not necessarily guaranteed safe. It's being managed by an advisor, and they charge a fee for that. These fees can range anywhere from 0.5% to 2% each year, sometimes even more. And not to say that all annuities with fees are bad, but if you're getting into something to grow your money, like an accumulation annuity, then typically you don't want your growth being dragged down by a bunch of fees, unless you really feel like you need those extra bells and whistles and are willing to sacrifice some growth in your account for it. Guaranteed income annuities. Now let's talk about guaranteed income annuities. A lot of you probably associate all annuities with this specific type of annuity option because this is usually what's advertised. Create your own pension, turn your 401k into income for life. If you've seen any advertisements like that, they're probably talking about guaranteed income annuities. And guaranteed income annuities, just like how they sound, will pay you a set income for the rest of your life in exchange for a lump sum value. This income will continue guaranteed no matter what the market does or even if the money runs out in your account. The annuity company will guarantee that income for the rest of your life, and some of them do have the option to continue the income to your spouse even if you pass away, which sounds great, and it can be. But it's important to know that typically these annuity companies will charge an annual fee for that guaranteed income benefit, which again can range anywhere from 1% to 2% each year. I've come across so many people who were sold a guaranteed income product, but they didn't really need the income. They were actually looking for something more to grow their money. And with these guaranteed income annuities, the annuity company will maximize your income payments, but they typically don't maximize the growth in your account. Your money will grow. Usually you will have interest credited, but the interest rates aren't nearly as competitive as an outright accumulation annuity. So lower interest rates combined with the annual fee, with you taking the max amount of income each year, usually drains your account value over time. And if your goal wasn't necessarily to have the most amount of income coming in, and maybe you were going into an annuity for growing your money and protecting it, then maybe a guaranteed income annuity may not be the best fit for you. Because even if you don't use that income rider, the annuity company will still charge you that annual fee each year. So if the goal is to grow your money, then you probably don't want to lock it into a guaranteed income annuity where you're being charged a fee every year for a benefit that you may not even use. Also, these guaranteed income annuities can have extra bells and whistles that you're also being charged a fee for on top of the income rider, just like what I mentioned earlier. So again, not to say that an income rider fee is bad, it just depends on your goals. So if you're looking for an income annuity, it's important to really understand what you're getting into. And again, ask your advisor what fees, if any, are involved with that. Hybrid annuities, growth and income. And finally, the hybrid annuities. These are going to give you a mix of growth potential in your account and guaranteed income, but with these plans, the annuity company typically won't charge you an income rider fee just because the guaranteed income payouts are usually a little bit less than what you can get with the guaranteed income annuity with a rider fee. This is going to be best for people who maybe have less of an income gap that they need to fill in retirement, and they're okay with the lower income payments because they also want to grow their money and preserve their principal. These can vary significantly from product to product, but usually it gives you a good mix of growth potential in your account because they'll typically offer higher interest rates than a guaranteed income annuity and still provide that security of the lifetime income payments if you need it. If there is a need for extra guaranteed income in retirement, I typically like to show my clients both the guaranteed income with the rider fee and the guaranteed income with no rider fee. That way they can see what their monthly income could look like for both plans and then really decide what makes the most sense for them. The real problem isn't fees, it's mismatch. With all that being said, the issue isn't annuities are expensive and have a bunch of fees. The issue is people don't understand what they're signing and putting their money into. Now you have a better understanding of the different types of annuity fees and when they may or may not make sense for your situation. Are you paying an income rider fee that you won't use for 10 plus years? Are you paying 1.5% annually on extra liquidity you don't really need? Are you paying a fee each year to be in a particular strategy for crediting your money? Are you paying for extra bells and whistles that you don't really need? Now you're thinking strategically. Market-based accounts. Let's be real. Many managed portfolios charge 1 to 2% annually plus fund expense ratios, and people rarely question those fees. So if an annuity has a 1% rider fee for guaranteed income for life, that doesn't necessarily mean it's bad. It just has to make sense for what you're trying to accomplish. How to avoid overpaying. So if you're shopping around for an annuity, here are some questions to ask your advisor. Ask if the annuity has an annual fee. Ask what the rider fee is, if any. Ask, is there an option to remove the fees later if needed? If an advisor can't clearly explain the fee structure in plain English, that's your red flag. The right annuity structure depends on your age, your income needs, your risk tolerance, if you value legacy and principal protection. Some people need income riders, some don't. Some just need principal protection with growth. If you're reviewing annuities and you're unsure what fees you're paying or what annuity product is right for you, that's exactly what I help people with. Use the link in the description to book a strategy session with me because the goal isn't just avoiding fees, it's making sure you're paying for the right guarantees and not the wrong ones. Talk soon.